Welcome to the Investing Mastermind Podcast. My name is Sina Lundholt.
And I'm Michelle Markey.
Today, we're going to start a series based on Warren Buffett and Charlie Munger's 4 principles. And to walk through the steps, both Michelle and I use a checklist. We will link to a checklist that I use in the show notes, so you can use it too. We will mention the checklist in this series, but you don't need to have it in front of you to follow along here. So a lot of independent investors might buy a stock because it pays a dividend or the stock is trendy. And then after they bought it, they might experience to have a myriad of questions depending on if the stock is going up or down. So for example, what I see on social media is, why is Tesla down today? But for us, for Michelle and I, we learn about the company behind the stock before we invest. So over the next couple of episodes, we will go deep into what we do before we buy a stock. Warren Buffett has 4 steps, and these are the steps that we will cover in this series. So step number 1 is I can understand the business. Step number 2, it's operated by honest and competent people. Step number 3, it has favorable long-term prospects. And step number 4 is available at a very attractive price. So today we'll take a deep dive into step number 1, I can understand the business. And as a new investor, you might need to get started. So today we'll cover brainstorming, what gurus are investing in. We'll talk about other ways that you can find stocks to choose from. But to go back to the checklist, the first question I have on that checklist is I understand the business because it's a product or service I use with delight in my private or professional life. Here's what I know about the business. And then I write down what I know about the business. And Michelle, I know that you also try to actually find companies in your circle of competence that you like to do or something you use in your private or professional life. Could you try to explain what exactly you do?
Yeah, so both Sina and I learned this exercise from Phil Town and Danielle Town when we were reading their books and listening to their podcast. And this exercise is called the 3 circles exercise. And it asks you 3 questions across a triple Venn diagram. And I actually made a YouTube video about how I pick my stocks that I'll also link to in the show notes. So you can check it out if you're a visual person like we both are. So I think that can help you get an idea. And in this example that I made, I did a Venn diagram about Starbucks, mainly of how the company Starbucks ended up coming within my circle of competence. And circle of competence is just another way of saying, am I able to understand this business? So what you do in the 3 circles exercise is you answer the question in one circle about what do I vote for with my money and also with your time? Because if you spend time somewhere, or if you are making money there, or you're spending money somewhere, you're spending a combination of valuable things between your time and money. So if you think about that, I thought of where I used to work as a teenager and in college, which was at Starbucks. And I have a lot of things that I vote for with my money, including like I enjoy shopping at Costco, or I also enjoy, wild salmon or grass-fed bison and beef. So I like buying those things at Costco, or if I see them in a grocery store, I might buy them there. So that's how I'm voting for my money. So maybe if I'm so passionate about some of those things, I might look up what are the kinds of companies that sell these items or things that I'm interested in. And the next question is, where do I make my money? So in this question, you can think about the sources of your income, and a lot of it for us are our jobs. Like I work as a project manager, so I made money in that way. And also I get money from my bank when I get interest on my savings. And once upon a time, I made money at Starbucks because I used to be an employee there. And so that is another question. I fill in that circle. And then the last circle is about what am I passionate? So I'm passionate about coffee. I usually have a cup of coffee in the morning. And sometimes if I'm dragging a little bit, I might have a little pick me up espresso in the afternoon. So in having filled out these 3 circles, a common thread is Starbucks as a company, because I enjoy their coffee, and it just so happens that they are a public traded company. So I could invest in Starbucks if I would like to. And that's where you see what are the overlapping themes in doing this 3 circles exercise. So if you do that more, you'll find a common thread across anything. Like, it doesn't have to be food related, like I was just talking about right now, but it could be about other things you're passionate about, like social causes or the environment. And if you figure out things that are within those Venn diagram of your 3 circles when you do this exercise, then you'll come to go on to some companies or industries that fit those values that you filled in. So I hope that that explanation made sense. And Sina, what do you think about the 3 circles exercise, or want to add?
I also use that exercise and find it extremely helpful. One thing I could add is we don't want just a few businesses on that list of businesses. Make sure to really go into brainstorm mode here, because as a beginner, you would want to have a long list of ideas, because you might find that some of these businesses are private companies and we can't buy stocks in private companies. Some businesses might produce quality products, but they aren't healthy businesses per se. Something we'll dive deeper into to actually spot whether or not it's a healthy business. It might be a quality product they produce, but their business might not be good. They aren't winners. And then I also encourage to put down competitors on that list. So for example, if you wrote Moonchild yoga pants, also put companies like Lululemon on that list too, in order to actually have a lot of companies on that list, even though it might not be your preferred yoga pant company. All right, so on to the next way to actually find companies that you could dive into and that you could invest in. We're still at point number 1 in the checklist, but just to give you some more ideas on how to find businesses. One thing I do is that every time there's a new 13F filing coming out, I get really excited, because in these filings we can see what some of the guru investors out there invested in. So people like Warren Buffett, Guy Spear, Phil Town, Lilu, Monish Pabrai, and other value investors. We can see what they have invested in. And I personally like to use the website Dataroma to find out what these guru investors invested in. Do you have any way of finding out? Do you read the filings, Michelle, or do you have a favorite website, or how do you find out what gurus are invested in?
Yeah, I usually use Dataroma too, but then sometimes I'll go back to the official source, like the Securities Exchange Commission, the SEC's Edgar search engine, and then I look up the actual 13F filing showing which stocks a lot of these super investors are in, because sometimes, even though sites like Dataroma and Whale Wisdom are pretty good, they sometimes also have little nuances to stocks, like if a stock has split, and that might not always be reflected across certain websites. So I like to make sure I go back to the source to double check what it once was, or might still be, and it's good to make sure you compare the original source to any third-party sources before you make any decisions or conclusions based on what you think some third-party sites are showing you. But that's a great way. We found out that that's sort of like a shortcut way of finding companies that we want to ask ourselves, is this maybe in my circle of competence? Like, can I understand the fact that Berkshire Hathaway, that's led by Warren Buffett, why did they invest in Taiwan Semiconductor Manufacturing Company, which we've talked about a little bit in past episodes? But it makes me wonder, like, can I understand the semiconductor industry? Like, and if I can, that is a slight shortcut, because it's sort of been vetted by an even better investor than me. Like, we don't know for sure if it was Warren Buffett or maybe one of his investing managers, Todd and Ted, but either way, they're still way better investors than me. So it's a little bit of a shortcut as to, giving us a clue of what might be potentially really great companies to invest in. And then you kind of do the homework to see, can you understand this company? And if it's within your values and other things that are on Sina's checklist, we'll talk in more detail about, but you then do the hard work. Like, you don't just blindly buy the company just because a guru investor bought it, but you have to really ask yourself, what is that company about? And do I agree with it? And do I want to own it eventually, maybe at a certain price? So that's a very important thing to do, is like, while it's great that a super investor basically is endorsing it because they're voting for it with their money, that doesn't necessarily mean we should just follow them without thinking critically about it ourselves.
Yeah. So I mentioned a few of the investors I look for. And what is important to also note is that it's actually their companies that we will have to find. So for Warren Buffett, it would be Berkshire Hathaway. For Guy Spear, it would be Aquamarine Fund. And Michelle, do you have any of these mastermind investors that you follow and would like to see 13F filings from besides Warren Buffett?
Yeah, I mean, I also look at Monish Pabrai, and his stuff is sort of interesting because I think his funds have a variety of names. Like, sometimes they'll be displayed as the Lal Street LLC or Pabrai Funds. And there's also Charlie Munger with the Daily Journal Corporation. And, there's a whole lot of them that I try to check. And and also Lee Lu is Himalaya Capital. And, there's a lot of investors that every now and then I just check up, because Dataroma has over 70 super investors. So I think it's pretty cool that you can check out a bunch of investors and see if you like their style and the kinds of companies they invest in. Because, like, one example, I know Bill Ackman of Pershing Square Capital. He previously invested in Starbucks, and he's no longer invested in Starbucks. But to me, I was like, I felt vindicated that, this really great investor had once upon a time invested in a company that I'm also interested in, Starbucks. So even though he's not in it anymore, it was still sort of nice that, me as just an individual investor, that my choices are validated by an even better investor.
Mm-hmm. Yeah, absolutely. All right. So moving on to another thing that you can do, at least I do, to get inspired, because what I hear oftentimes, especially with new investors, is it sounds easy to do this brainstorm, but in my courses, often people are saying, well, we couldn't think of companies we actually understood. And that's why it's so important to just try to brainstorm, try every way you actually can, try to get some companies on that list in the very beginning, try to do that. And then everything, as you start reading the annual reports, you'll actually start to understand, maybe this is too complicated, or I actually get what they're writing in this annual report. But another way I find companies could be reading through a list of industries. There are many of these industry lists out there, also depending on where in the world you live, where you could get inspired and you can see companies within that industry. For example, if you're in the fast-moving consumer goods industry, you could find similar companies and get some inspiration there. Another way you could find companies are using a stock screener. I like to use Finwiz. And if you listen to the next couple of episodes, you will also get some indications of some parameters you could actually use in these screeners to find some really, really great stock. But more about that in the next episode about management. Michelle, do you have other ways that you get inspiration for companies?
Yeah, like sometimes it's just the things you use every day, like asking yourself, who is my cell phone provider? Do I like the service I'm getting from them? And are they publicly traded? And maybe if you like them, you pay them every month anyway. Maybe you might want to get some money back by investing in them, because, like, even some companies might not necessarily give you a dividend, but the way that you get money back from some companies that aren't offering a dividend is because they're just growing, because the services they're offering customers are just excellent. So that means more people want to invest in that company, and then its intrinsic value rises, and then that might reflect the stock price also going up. eventually. So, if you believe in some of the companies that you use in your everyday life, like it could even be car insurance, and you ask yourself, who's providing my car insurance? Do I like the service I'm getting? Am I paying a good price for my car insurance? And then sometimes they're publicly traded and you're like, this is great. I'm like, even though I'm paying them my car insurance premium, I also get my money back because I'm invested in the company stock. So it's sort of a win-win if you find these companies that, you agree with, you like the service you're getting, and it can really be that simple sometimes. It doesn't have to be some super complex topic like advanced sciences. It can just be what we as consumers are using every day.
Yeah, absolutely. So the next question I have on my checklist is, the business matches my personal values and ethics in following ways. And I think that is a super important question, especially for our generation, the millennial generation, because we really like to vote with our money. And I see a lot of investors, independent investors out there that invest because they believe in green energy. And I think it's important to also reflect a little bit on your values and ethics before investing in a company. One of my parameters, for example, being a woman, is that I would like to see some females on the board or in the management team. But it could definitely be other things. Like there are certain companies I just would not invest in because then I wouldn't be investing according to my values. And then there are other companies that you might not invest in, but I might, because it's not something that's within your set of values, but where I'm like, but I'm fine with that. Is that
Mhm.
something you think of, Michelle, when you invest?
Yeah, totally. And we all have different things we care about. So, for example, when I was younger and didn't know how to really study companies, I had just been looking at a company's stock chart and seeing like, is it kind of going up, and what is the dividend rate they're offering? And those were like my main two criteria of just guessing and having no idea about the company. But then maybe that company is doing damage to the environment, and like that's not okay to me if, at the expense of future generations and the environment, like that you get a dividend now. And what if the dividend is not the best way that the company could be using money? So there's a few ways a company can allocate its cash. One of them is to give it back to us as shareholders in the form of a dividend. Another way could be to reinvest in the company in new business ventures or acquiring other companies that contribute to the core business. Another way is if they buy back shares. So maybe a company giving us dividends is not the best way. And so maybe I just disagree on that point alone, which Warren Buffett doesn't want to do either. He has defended many times where Berkshire doesn't issue a dividend because they can find a better way to invest that capital. So they only issued a dividend like once, and Buffett was embarrassed about it, that he thinks that it was a mistake. So you can see that you can decide for yourself how you think a business is using their money, and if you think it's for a good purpose or not, and that can help inform if you want to go with that company. So with that, like there's so many questions you can ask yourself about the values and ethics of how a company is treating the world around them and the communities that they're affecting, like the people where we live. Like, if they're dumping dangerous chemicals in rivers where we live, then that could be really detrimental to the health of the community. So you don't want to ideally invest in a company like that if you're aware that they're doing such bad things. Like you want to, try to pay attention to what impact is this company having on the world. And if, you draw the line somewhere in terms of your ethics of what's acceptable to you and what's not acceptable.
Yeah, and one thing I do when I think about this question is, if I owned the whole business, would I be proud of owning it? Like I just want that feeling of, yes, I would be so proud of owning this company. And if I don't get that, then maybe it's not for me. I think Warren Buffett, he says something like, we want a product where people feel like kissing you, not slapping you, or something along the lines of that. So he definitely also thinks about this, even though it might not be on his 4-step list. One thing Buffett and Munger says is that they stay within their circle of competence. They don't even go near the edge. And there is this edge where there might be some unconscious incompetence. So something you might know, or you don't know that you don't know it, right? So
Yeah.
you really want to stay within that circle of competence.
Right. Yeah, that's a good one. And like one example of this is, for a long time, I didn't think that I could understand big tech companies because, like my uncle had lost some money during the dot-com bubble, and, a lot of tech stocks were hyped up back then, and they were also hyped up again recently during the, pandemic boom in stock. So with some of that, like, you have to ask yourself, can you understand um that something like, say, Amazon, which looks unprofitable on the surface, but really it's because they're pumping a lot of money into their research and development, and a lot of what they're reinvesting in is going into the Amazon Web Services, their cloud business. So I didn't think that I was capable of understanding some of this before. Like years ago, I wouldn't have known where to even start. But by listening to other investors who explained what are some of the investing cases for certain kinds of companies, and then doing my own research and trying to better understand the company's financials and their operating margins and all these kinds of things you could study, it helped me to realize, like, no, I can understand this. This is not just, some hyped up stock. Like I could be able to understand it. But you have to be careful about that, because maybe we also get too confident. Like we think, oh yeah, I totally understand, you know, GameStop and AMC. They provide video games and movies, and there's a lot of people I'm friends with on Wall Street Bets who maybe, they're also really into this. But you could just be really confident, but not necessarily truly understand. So you have to be careful about if you're overestimating how much you think you understand about a company.
Yeah, absolutely. So moving on to step number 3 in my checklist. The question there was actually inspired by Charlie Munger, and he asks, what is the greater context? How does the company fit into the world? And this might actually be the very last question you answer once you've done the whole checklist. So for this checklist, you don't need to go through it step by step. I would say, of course, understanding the business is pivotal. You should do that before you move on. But this question, number 3, it might actually be the very last question that you answer. It's not necessarily about what the future holds for the company. We're not looking for trends, but we are looking, is this industry potentially a risky business? For example, you could say that the car industry is currently going through a lot of disruption with electrical cars, self-moving cars, self-driving cars. It's just a business where it's really, really difficult to predict which of all of these cars will be the winner in the future. Whereas industries that haven't gone through disruption, or industries about gum, for example, will this change the way we chew gum? It is not necessarily an industry that's going to go through disruption. So we want to just look into the greater context of the world. One of the things I also think about here is what I actually don't necessarily know a whole lot about. Again, I don't try to speculate what will be trendy in the future, solar power, etc., because we simply do not know about the future. I'm trying to think about risk or disruptive areas. So I don't start speculating on the future. Like many investors actually are looking for the next trend, and I try not to do that. I don't invest in companies in China because the culture out there is so different than my culture. I don't understand it. If you know a lot about the Chinese culture, then definitely go ahead. I just don't know a whole lot of that culture, so it's not in my value investing portfolio. Also, insurance companies. I remember Monish Pabrai invested in an insurance business because Warren Buffett has been so successful in insurance, but he just said the whole thing about float is actually super complicated, which is something that an insurance company is generating that Warren Buffett then use for investing, but to Monish Pabrai, it was way too difficult. So yeah, that's something I stay out of. Do you have any sectors that you try to stay clear of?
Yeah, like sometimes there's like areas I just haven't tried to study, like say military defense contractors, like that's not within my circle of competence because I haven't tried to study that industry, and I'm not sure if I want to because it seems like a little bit hard, and like I don't know what the future holds per se with, what's going on in the world of like say national security and weapons. So I try to stay away from things like that if I can. And, like I try to not make it too hard. Like I try to stick to things that are kind of obvious, like things that I might use every day, like tech or consumer things that I'm more likely to participate in. Like for example, I would love to buy Costco because I am pretty sure I understand their business model of offering high quality goods at the lowest prices, and that's part of their cost moat, which I think we kind of mentioned before in another context. So we look for things that are great quality, that we're able to understand and that we can get behind, that we like the mission and vision of a company. And that's really what it boils down to is if you feel like you can believe in something like this for the next 10 years and that it's a predictable kind of company, that it's not too hard to figure out where is it going. And that's what Sina was mentioning with how is it going to change the way we chew gum or drink coffee or eat Mexican food? Like that's a way that, Chipotle has been one of the better companies offering Mexican food that's at a good price. So something like that, if you can see that there's some predictability, that could help you in feeling more reassured about where it's going to be in the future.
All right, so just a disclaimer, we're not endorsing Starbucks, Costco, or Chipotle. Do your homework before you start investing. If you listen to us, you know that you need to do that and not just go invest in any business we mention here. So we're coming to an end of today's show. If you're a new investor and listening, I encourage you to take an action and do this exercise before the next show. So do the exercise that Michelle mentioned earlier, brainstorm, do research, do something to find a couple of businesses. If you're in the car or exercising right now, ask Siri to schedule time in your calendar to do this. And then you're ready for the next step in the next episode. Bye-bye.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.